Welcome to the program. Very wonderful morning to you. I hope you're doing great. It's the 3rd of August, a Wednesday morning, and I hope you're having yourselves a wonderful morning wherever you're watching us from. You're watching Smart 24 TV, where we drive your business, and my name is Anthony Sebali. Of course, you can catch the show every Monday to Friday, and we are here usually to talk about the markets, as of course, per the performance of the Ugandan markets. We look at the Kenyan markets as well sometimes. We even cross into other global markets and monitor the performance of these particular markets. And of course, this very morning, I'm very glad that we have a very impactful show ahead of us, as later on we are going to be talking about brokerage with Mr. Kimuli, who is coming from SBG Securities. So if you've ever wondered what these brokers do, if you've ever wondered how stockbrokers have evolved and how many listed entities do we have in the stock brokerage firm, anything surrounding stock brokerage, today we are going to be talking about that. And of course, you can always give us your comments. You can always ask questions via our social media platforms. That is at Smart 24 TV. And you can also look out for our YouTube live stream at Smart 24 TV Live for more information concerning the show. And you can also catch us on GoTV channel 394 for your latest business content. I hope you're having yourselves a very good morning so far. And of course, today we are looking at the market performance like MTN, who are gaining yesterday, losing. Also, Stanbic Bank Uganda lost further. You're looking at things like NMG gaining, and the cross-listed equity in particular here on the gaining side alone. And why we trust these markets, number one, is the fact that these markets influence a lot on the economy, about the economy. And you cannot measure the performance of the economy without looking into the stock markets. And these markets help us to kind of tell how much of investments have people made with their savings into at least these securities. You're looking at securities like for example, the debt instruments like bonds and bills. You're looking at the stock markets. And all these investments of savings are what people look out for and see as, of course, a country's growth indicator. And in these financial markets, basically looking at the stock market in particular, it helps companies gain capital. It helps companies be able to amass a huge amount of capital cheaply. Rather than going to the bank and borrowing huge amounts of money with huge interest rates that are coming in, especially during this period, companies would rather come to the public and access capital cheaply without having to go through the hassle of getting loans and so on. So on the show here in particular, we look at these markets to give us the other side of investment, that the fact that investment is not only in land, it's not only in rentals, it's not only in property, in tangible assets, but you can actually invest in non-tangible assets. And for those of you who are the first timers here, just a humble reminder, these are not as complicated as they seem. These markets are not any complicated as they seem. They're just any other like any other markets we have. For example, if you go to Nakasero market right now and you want to purchase tomatoes, you go with an idea of what you would want to buy, the price at which you would want to buy. And then, of course, when you get to the market, of course, the vendor or someone who is in charge of the market or that particular stall you've visited mentions that, hey, I'm willing to sell at this price. And that way, of course, there's a bargaining that happens in between. And later on, when you have a deal, you can be able to transact. They give you the tomatoes, you give them the money. This is exactly how this market works. We are joining two kinds of people. That is, number one, the public and the investor. The public, which are the investors, who are the investors actually, and we are also joining them to the companies that are looking for capital, who are the borrowers of this money. And this money, of course, comes in two packages. We have the primary market, where we're looking at the very first time a company is listing. This is the first time a company is deciding to go public. Because as you know, someone thought of starting a company like MTN someday, and maybe we were not there, perhaps the public wasn't there. And they have been running this company on their own. They have been running it with a few people, of course, governors, board of governors or board of directors. You're looking at the MD, the CEO, and a couple of other people in the management positions, as well as the employees of the company. But then when you decide that you're going to go public, it means that you're going to give away a certain share or a certain proportion of the company to the public. You don't have to give away 100%. You can choose 20% minimum, and this 20% goes on to the Uganda Securities Exchange or any other exchange that is licensed and mandated by the government. Now, this first time company listing, the first time the company is listing is what we call the primary market. In other words, shareholders are buying out shares into a company for the first time, and they're buying these shares directly from the company. This is called the initial public offer. You're offering the public a chance to partake some of your shares for the very first time. And this first time, of course, comes with a specific price where companies are selling the shares at a particular price, and this happens for a given period of time. It doesn't last forever. And immediately after the period has ended, if there are any shares that are left, they're taken back into the company. If there are no shares left, well and good. And of course, if the shares are done before the period, of course, the company could list more, or they could decide to stop on that as well. Now, immediately we close the primary market, that is after the initial public offer. These people from the public have been able to contribute this amount of capital. The company has been able to gain this capital and is going to incorporate it into its working capital and try to expand and try to grow, try to become more innovative, increase their production, and so on, depending on the nature of the company and the services the company provides, or the products of that particular company. When this primary market is done, we move on to the secondary market, and this is exactly where we, right now, what we talk about here. When we come to these graphs, when we come to talk about the prices, of course, they're passing down there on your screen. As you can see, those prices are on the secondary market, and people are buying and selling shares that already were bought out from the company in the primary market. And in the secondary market, you're not looking at people buying shares from the company. You're looking at people transacting shares amongst themselves. People who already bought shares in the initial public offer are now free to be able to sell them to other people in the public. This is the secondary kind of market. And the prices for these particular determined entirely, almost entirely, of course not entirely in the aspect of the fact that there are so many other factors that could come into play when we look at the prices, but they're almost entirely determined by the demand and supply of the shares. If there are many people willing out there to sell the shares, meaning the supply is high, and there are few people or fewer people willing to buy these shares, you'll find that people will sell desperately at lower prices. Of course, you will ask me then, why do we have a fixed pricing? Yes, the price is fixed. That is a closing price, an opening price for the day at the Uganda Securities Exchange. But there is a 15% window, which we have to keenly look at here. This 15% window allows people to trade within that gap between 15% of that price, either above or below that particular selling price, but not anywhere beyond that, unless stipulated, of course, by the exchange itself. Particularly, there are days when the exchange says, because maybe a certain counter is just talking about the company is not trading for a very long time, the exchange can decide to have an open day market where we let people trade at any price they feel comfortable with. That way, maybe they feel they can be able to attract more investors, or they can be able to make the stock more active in that perspective. But this 15% window allows these people to bring in what we call the capital gain. People can sell at a higher price and gain from their shares, or people can sell or buy at lower prices. And this is how prices move. If more people are willing to buy at a higher price, definitely you will see the prices moving upwards. And people have several reasons why they intend to buy more of a certain stock more than other stocks. And these reasons are entirely personal. They're entirely dependent on the person who is buying or selling the shares. But of course, these move the price above the starting price or the opening price for the day, or they move them to below that price, depending exactly on how people have reacted on the market. Now, when you see a closing price, that is the price at which when the markets were closing, that is the last price that, of course, most people have been able to either buy or sell, or that is the last price that we are looking at as the closing price for the day. And this particular price usually is what we see here on the market exactly after 1 p.m. When the markets have closed. And usually that's the price that opens the market the next day for trading. And people can still trade within the 15%, remember, like I said, but of course, with the opening price maintained at the closing price of the day before. Now, markets work from Monday to Friday, every weekday, and that is from exactly 9 a.m. to exactly 1 p.m. for just 4 hours. That's when these markets are able to be open, and this is when the trading is done. And of course, since today we are talking about the brokerage, and we are talking to SBG, one of the very outstanding stock brokerage firms here in Uganda, we are seeing that they will share with us later on how they do this, because the person we are having, Mr. Kimoli, is coming from the traders themselves. These are people who trade on the stock, and these are the people who actually make the transactions. Because remember, the rules are you cannot do this on your own. You cannot go out and say, I would want to buy shares on my own, and you go to the exchange. All you have to do is open an SCD account, which is something that is a prerequisite for trading. You cannot trade unless you have an SCD account, that is Securities Central Depository account. It works like a bank account, mobile money account, just that this time we are not storing money, we are storing instruments or securities that are traded on the exchange. So whenever you buy shares, it's credited. Whenever you sell, it is debited. And these Central Securities Depository accounts are, of course, protected. They are well regulated. And even the Uganda Securities Exchange has an entire department that is designated for registry. And this registry is, of course, people registering for their accounts, companies also registering and so on for their IPOs. This is the entire department for registry. And right now, by just dialing *165# using your MTN mobile MTN line, you can right now access these accounts by dialing *165#, and then you choose option 6, that is financial services, and then you choose option 5 for the Uganda Securities Exchange. Later on, they will ask for your personal data, of course, for proof of identity. For that matter, they will ask for your national identification number and maybe your passport number. And when that is done, your account will be opened absolutely free of charge. even if you don't have any coin on mobile money, you can open this account and trade whenever you get the money. And so when you're done with this account, you reach out to the stockbroker because you've opened the account, you already know the market, you know where you want to invest, and then you go to your stockbroker and you contact them. There are 4 stockbrokers so far that are licensed in Uganda. We have Standard Bank Group, Standard Bank Group is a subsidiary of the Stanbic Holdings, Uganda. And these are also specialized in brokerage. Then we also have UAP Old Mutual Brokerage Firm, and then we have Crested Capital, and then we have the other Dyer and Blair. Yes, that's the other stockbroker there on the licensed by the Capital Markets Authority. And these 4 will help you, of course, to be able to buy and sell shares after performing a very critical analysis of you as their client, looking at your risk appetite, looking at your interests as an individual, and they will also provide education. In case you need to learn more, still the stockbroker will help you with information regarding the markets. They will help you with the prices, they will help you with how the market moves, they will help you with everything from groundwork, from the elementary work, all the way to the time you want to actually start to buy shares. And the trading is done by trading officers. One of them is coming here today, and you will be able to see what really what it takes for the a person working in a stock brokerage firm to be able to buy or sell stock on behalf of a client. And these people, after of course helping you to buy these shares, of course there's a certain period of settling time, what we call settling time, to be able to have the deals done and to be able to transact the shares onto your SCD account, about 2 to 3 days, depending really on the stockbroker, but not more than 3 days, the settling time for you to be able to get access to your shares. Now, when you get these shares, you can ask for benefits. Of course, when you invest in a company, there are so many benefits that come along with this investment. You have people, of course, investing for different reasons. Some people invest for interest. They're interested in a certain sector and they would want to invest in more in that sector. So if someone is interested in pharmaceuticals, you find they're interested in investing in simpler quality chemicals. If someone is interested in banking, you find they're more interested in investing in banks and the financial services sector. Others are looking at making money through dividends, through bonus issues and so on. And so they invest in companies that have a good history of issuing dividends. This is where you find companies like maybe when you're looking at maybe Umeme. Umeme has been one of the companies that has been very consistent in issuing dividends. So someone who is interested in that can still invest for that reason. Whatsoever reason you have for investing, the stockbroker will be able to give you a hand in doing that. Now, with that brief background, I hope I always want to do this because many people always come out and say, we don't understand the market. We don't understand, but it's very simple. It's a very basic concept, and how you earn from it, that's another story. But at least for the beginners, this market, you have to know that all the developed economies we are admiring, like the United States, China, in the Europe, you're finding that their stock markets are very, very lucrative. Their stock markets are some of the things they look at as performance indicators for their economy, their benchmarks for their performance as an economy. They invest billions and billions of US dollars and trillions, matter of fact, in their stock markets, in their other financial markets. Of course, financial markets are not limited to stock markets. You have the debt market where you have the bills and the bonds. You also have the commodities market where you have things like gold, precious metals, other precious metals like silver, platinum, and so on, copper. And then you have the derivatives market where you have specialized products. Of course, that these require a little bit more education for one to invest in. But bottom line, these are what determine how good a market is, how good a certain economy is. You cannot have a company, for example, the United States, grow to become one of the maybe the leading companies in producing maybe let's say cars, let's say Tesla, and it's not listed on the New York Stock Exchange. It's unheard of. Yeah, the best companies are all listed. Talk about Google, talk about Apple, talk about Facebook. All these companies are listed. Why? Because listing gives you an option for cheap capital that you can be able to raise easily without huge interest rates, and capital which you can be able to harness from the public, and of course add value also to the public by the matter of fact that as you buy shares, you're also adding value to yourself, because shares are assets. As I always mention here, shares can be transferred, shares can be put in a will. Yes, if you're writing your will somewhere with your lawyer, you can say, yes, I have 1 million shares in Stanbic Bank. Yes, that's an asset. Yeah, and these assets are transferable. And the other way you can view it is they can be used as collateral for getting loans, mortgages, and so on. And all these are what we need as individuals to add value to our personal, our personal persons, and also to be able to add value to others. You can buy shares for your children instead of maybe opening for them a bank account. You can open for them an SCD account and start buying shares. By the time these kids are in probably high school, they already own a good share of companies. Yes, you don't have to start for them a company when listed companies are there that are willing to give you shares and be able to add value to your money, add value to your children, add value to your family without you even working a single day in these companies. I hope that was a brief background that helped you really get up to speed with what we are doing right here. And when I look at the markets yesterday, we are seeing that we had two bottom losers. That was Stanbic Bank Uganda and MTN. And on the gaining side, we had about 5 gainers, and these 5 gainers were mostly listed from Kenya. Actually, we have 6 gainers. We have Equity Bank, who came in at the top. Equity Bank Limited came in at the top with a 0.17%. We have JHL, that is Jubilee Holdings Limited. Remember those symbols there. What you will find on the Uganda Securities Exchange, or when you're trading somewhere, you'll not find Equity Bank. You find that symbol called the ticker symbol, and this ticker symbol looks at gaining, of course, making the name brief, a little bit brief. And you can see Equity Bank there Limited at 0.17% gain. You can see Jubilee Holdings Limited at 0.17%. You can see, since most of these are cross-listed from Kenya, their movement was almost within the same on the stock market. And we shall view the details, of course, of that later on the show. Thank you very much for deciding to remain with us. And we're going to take a very quick break. When we return, we look at the details of these performances and what this means for you and me. Stay with us.